You don't need to be rich to invest. You need about $5 in 10 minutes. And by the end of this video, I'm going to show you the exact math that turns $200 a month into $226,000. There's just one number that decides if you ever get there. Most people never figure it out. You're about to. Here's the deal. The stock market sounds scary. Charts, red numbers, guys in suits yelling on TV. But strip all that away, and investing is really just one simple machine that grows your money while you sleep. I'll show you how that machine works, the real numbers behind it, and the 3 biggest lies that keep regular people broke. And that one number I mentioned, the thing that beats picking the perfect stock, that's at the very end. Stick around, because if you get that one wrong, none of the rest matters. It's not a casino. First, let's kill the biggest myth. You think buying stocks is like betting on a horse. It's not. When you buy a share, you're buying a tiny piece of a real company. Apple, Coca-Cola, the company that makes your toothpaste. So when those companies sell more stuff and make more money, you own a slice of that. But here's the problem. Betting on one company is risky. What if you put everything on the toothpaste guys, and the whole world switches to mouthwash? So smart beginners do something different. Instead of one company, they buy a tiny piece of basically all of them at once. 500 of America's biggest companies in a single click. It's called an index fund. Fancy name, boring idea. And boring, it turns out, is exactly what makes you money. I'll prove that in about 90 seconds. The machine. Okay, now the machine. This is where the real math kicks in. Say you put in $100 and it grows 7% in a year. Now you've got 107. Normal, right? But next year, you don't just grow the original 100. You grow the 100 and the 7. Your money starts making money, and then that money makes money. It's a snowball, slow and tiny at the top of the hill. Then near the bottom, it gets ridiculously fast. And here's a shortcut nobody teaches you. Take the number 72. Divide it by your interest rate. That tells you how many years it takes your money to double. At 7%, 72 divided by 7 is about 10. So your money doubles roughly every 10 years, without you adding a single extra dollar. But wait till you see what happens when you do keep adding. Your real numbers. So let's run your numbers. $200 a month. That's less than $7 a day. One skipped takeout order. You do that every month for 30 years, earning about 7% a year, which is roughly what the market has averaged over the long haul. Ready? After 30 years, you'd be sitting on around $226,000. Now here's the part that should make your jaw drop. Out of that whole pile, how much did you actually put in? $72,000. That's it. $200 a month for 30 years adds up to 72 grand. So where did the other $154,000 come from? The machine. That money grew on top of itself while you were busy living your life. $154,000 you basically got for free. Quick question while that sinks in. What's the dumbest thing you've ever blown money on? Be honest, drop it in the comments. I read them. Mine was a treadmill that is now a very expensive coat rack. Okay, but here's where it gets real. Because everything I just showed you depends on one thing. And if you ignore it, that $226,000 can shrink to almost nothing. There's a single mistake that costs beginners more than picking the wrong stock ever could. It's not flashy. You're probably making it right now. And I'll show you exactly what it is in 60 seconds. You don't have to win. But first, lie number 2. And this one's expensive. You've been told the goal is to beat the market. Find the next hot stock before everyone else. Here's the contrarian truth. Most professionals, people who do this full-time, in suits, with giant screens, fail to beat the market over the long run. Most of them actually lose to it. So what chance does a regular person, checking stocks between meetings, really have? And that's great news for you, because you don't have to be a genius. You don't have to guess right. You just ride the whole market up, slowly, and you don't panic when it dips. Which brings us to the real enemy. It's not the market. It's not your salary. It's something way sneakier. Remember that number I promised at the start? The thing that beats picking the perfect stock? Here it is. It's not what you invest in. It's when you start. It's time. Let me prove it with 2 friends. Same paycheck, same 7%, totally different endings. Meet Sarah. At 25, she starts putting in $200 a month. She does it for just 10 years, then she stops. Completely. Never adds another dollar. All she put in was 24,000 bucks. Then she walks away and lets it sit. Now meet Mike. Mike waits. He's having fun. Figures he'll start later. At 35, he finally gets serious. $200 a month, every single month, for the next 30 years. Mike puts in $72,000, 3 times more than Sarah. They both open their accounts at 65. Who won? Sarah, the one who quit after 10 years. She's got around $250,000. Mike, who put in 3 times as much, ends up with about 226. Read that again. She put in less, way less, and she still won. Why? Because her money got an extra 10 years to snowball, and Mike's extra cash could never catch up. Time did the heavy lifting. That's the whole secret. The best day to start was years ago. The second best day is the one you're standing in right now. So let's bring it home. The stock market isn't a casino. It's a machine that pays patient people. You don't need to be rich. You don't need to be a genius. You don't need the perfect stock. You just need to start, keep it boring, and give it time. And look, none of this is me telling you exactly what to do with your money. I'm just showing you how the math works. Your move. If this changed how you see your money even a little, hit subscribe so the next time your paycheck lands, it hits different. And if you're sitting there thinking, okay, but where do I actually put the first $100? That's the exact video playing right here. Go watch it next. Future you is already saying thank you.